All right, looks like we're starting to slow down, so I'm going to go ahead and get us started. Nice to see everyone. Good morning, good evening, as I said, good day. Hopefully not too late, but good night as well. Welcome to today's webinar, hosted by Puro.earth in partnership with Nasdaq, and a guest speaker from CUR8. I'm Trenton Spindler, the Chief Growth Officer at Puro.earth. I'll be your host today. We're here to talk about a critical step in scaling high-integrity carbon removal, issuance, and offtakes. This is where finance, buyers, and suppliers meet opportunity. Over the next hour, you'll hear from Nasdaq, Puro, and CUR8, followed by a live Q&A. Today, we have a handful of very talented and exciting panelists and speakers. We have Swarnali Mitra from CUR8, Robin Green from Nasdaq, and Julian Jacob from Puro. We also have Thomas Tybud here, although not speaking, but will be supporting from Nasdaq during the Q&A session if anyone has questions. Each speaker brings a unique perspective on how offtakes are structured, what makes them bankable, and how we're positioned to scale. We'll see from each speaker how each venture is supporting this market and what they're doing to accelerate both supply and demand. With that said, let's begin by looking at how offtakes are moving from concept to calendar. To guide us through Nasdaq's approach, I'm pleased to hand over the mic to Robin Green, who will share the details of Nasdaq's offtake issuance calendar and why this is such an important market signal. Robin, off to you. And unfortunately, Robin, you're muted, which is the worst version of Robin in the world. Back to you.
Thank you, Trenton. Great. Thank you, everyone, for joining. I'm really excited to be here to talk. Think of this as a pre-launch announcement to the carbon.nasdaq.com offtake availability calendar that we're putting together when we're in the process of launching. It's a data product, and you'll understand as we talk through these slides why a pre-announcement actually makes sense. We need to pull the data in. So if we can move to the next slide, please. So what's our sort of vision here? Well, so Nasdaq operates in many markets, as I'm sure you're aware. And one of the sort of key pieces of structure as markets mature, we find, is transparency over the activity in the market, both transparency in current activity and transparency in future activity. So if you look it up, Nasdaq has an IPO calendar, for example, which lists future IPOs that are happening in the market, allows investors, financiers, buyers, sellers to all start to understand where the market is moving in the future. And we feel that this is a really important piece of market structure to bring into the carbon markets, into the offtake market specifically. And really that's the mission here. So as I say, we're in a pilot phase right now, but this is a data product. So what we are doing, the purpose of me talking now, really talking to suppliers and providers of credits, is to explain to you why we feel this is so important and to explain why we feel that the provision of data, the supply of data into this product will really help to transform and scale the market, both on an aggregate level and as an individual supplier level. So, what's our vision here? Well, scaling the market in a responsible way through the delivery of really clear price and volume transparency. We're looking to improve market efficiency. Many people are building this in-house in a way. We're aware that there are other firms putting together sort of smaller sets of data in relation to future availability, and that's great. But we feel there's a real need here for sort of a neutral third party to put something out into the market that is representative of the market and can act as effectively a foundational layer of data on top of which those actors can then build real value add products, be they advisory, transactional products. And just to be clear, we're not looking at advisory or transactional in this platform. We are purely looking at the dissemination of clear forward availability data for the offtake market. So if we move to the next slide. So we're trying to give you a flavor for what we're trying to do here. So there's a screenshot on the right there. So think of this as a data set displayed through a sort of modern interactive charting environment, filtering, drill downs, etc. So you imagine Power BI style of interaction here, but drilling down to some more detailed data and tables. So, why do we feel this is valuable to the market? Why is this firstly interesting to suppliers and product developers? Well, at the very least, it gives you a shop window. So this will be a global site. It'll be free to access this data, and this will give you this shop window of your product, your availability in the market alongside all others. So really powerful channel to get your product, your availability out there. There will be, not on this site, but links to monetization opportunities. So if you think around, once customers perhaps have filtered down, maybe they've brought maybe the many hundreds of records that are on this site down to 4 to 5, there'll be clear links on this site through to your preferred venues for either transactional conversations or advisory conversations. That will all be linked in. And the third point, which is I think also quite important, no fees. So this is free to deliver the data, free to access the data. We feel that this is a foundational part of the market. Other services will be built on top of this by third parties, intermediaries, the actors that we know well in this market. We're putting this out as a base service. So why is this valuable to the market? Well, as I've said, this is a neutral source of price and availability data. As a buyer or maybe a project financer, you can use this site to get a really clear picture on where the market is moving, where it is going. So both individual projects and on aggregate. So if you think, once you start to have this aggregate level of biochar suppliers or BEC suppliers coming in here, you start to get a view on where's the price coalescing, what is the availability of the next 5 years, are there opportunities for development, are there opportunities for financing, for funding. And as the market matures, we feel this is a really important pillar to then start to base further standardization. So you can start to imagine once this site takes shape, others can start to build in standardization around contracts or delivery or other mechanics in the market. So I hope that makes sense. So I think we'll move to the next slide. So how does this work? And this is the sort of pre-launch part of this. We need your data. Very clearly, for this to work, we need to bring in data from suppliers. There's a few ways you can do this. If you're a project supplier, you can either send us data directly, and there'll be some contact in the end of this to explain how to do that, and we can send you details. Or you can work with intermediaries in the market. You may well have MRV providers who you're working with. You may have preferred sales channels. You can also ask them to send the data up on your behalf. So two different routes to get the data to us. But it's just to reiterate, it's straightforward, unsurprising data that you think we may need if we're looking to provide aggregated signals on price and availability. But we also realize that this data can be quite sensitive. Price, availability, these are potentially signals in the market that maybe you want to be quite guarded about. So we're very understanding on this. So around those, we'd be looking for ranges, price ranges, availability ranges, delivery date ranges. So again, not asking for specific numbers, but if you're offering biochar, maybe you would offer into this data product, you'd say, well, look, we're pricing it between 130 and 170. And that would be the price that comes through the platform. You may say, well, we think are we at 8,000 or 12,000 tons next year? Well, again, you could provide that as a range, and then that is what would go out to end users. So very much looking to strike this balance between we need a signal. We need a signal in this site. It doesn't work without a signal, but we also need to be very understanding that as a supplier that you have confidential data that you are it's part of your differentiator in the market. So that's sort of hopefully allows you to share some data, but of course, in aggregate, as that data comes back to you, that is incredibly useful for you as well when you're looking at future investments, for pricing, for going off for financing, because then you can start to state to a project finance partner that yes, the pricing in 2030 seems to be going up, the volumes are going down, but there's opportunities here for investment, and those conversations can be supported by this neutral data. And of course, Nasdaq will do its, as it does with many data sets, many thousands of data sets, it will clean the data, aggregate it, and put it through in a very structured way. So I've mentioned the data is free to access. That's free to access behind a free-term register login. And we're purely doing that just so that we can understand numbers of users as you might expect coming into this. But the data is free to access to the market. I've showed you on the previous slide the sort of charting and interaction that we'd expect on this site. We've also got the Nasdaq Data Link product, which is a global product used to disseminate all market information coming through Nasdaq and our partners. And again, this data will be available through that. So it'll be available over API or download as well. It's worth also mentioning that just to sort of keep this data in some ways sort of comparable, we're working with a third party, and we expect them to be able to help us provide a little bit of guidance around delivery maturity. Should we call it that? Not the quality of the credits, but just some sort of high level pointers on the ability, the likelihood of a facility to deliver. So very clear, very deterministic, but if you're a producer who has been producing on this facility for the last 3 years, then the likelihood of you continuing to deliver is high. Whereas maybe if you're coming to the market new and you don't yet have financing, there's a different level of certainty on that delivery. And so I think you just want to highlight that here as well. And I think that's really important for a user of this system to get just a clear but deterministic and transparent. There's no sort of secret source sitting behind this. It's just acting, creating signals off transparent data around sort of likelihoods for delivery. So if we go to the next slide, next steps. As I mentioned before, we're keen to keep this, to get as many suppliers to provide us with your data as possible. So please get in touch. We've got a standard structure in place now for onboarding suppliers, and it's quite well trodden there. We've got most of the kinks out. I can't promise it won't be without bumps, but we've got most of the kinks out now. So we've got standard spreadsheets, data sharing agreements, etc., etc. So do please reach out to us. We'd love to have you as part of our launch. We're going to grow this. Nasdaq is invested in this as a product, so this is launching. And having you in this first phase would be great. I've got a couple of contacts down there, Thomas and myself. So please do reach out to us over email, and we'd love to carry on the conversation. That's all I have to say on this now. I'm looking forward to a load of questions at the end of this, but I'm going to hand over to our next speaker.
Awesome. Thank you, Robin. Really appreciate the intro and the context. And I know there's a lot of questions in chat. We will be answering this afterwards. A consistent one that I've seen is, will materials and information be shared after this? And the answer is yes. So you will all be able to see this recorded webinar as well as materials, contact information, and more post-event. But without further ado, I just wanted to say thanks again to Robin. And now I'd say the next big question, among many, many others, is, are these reported pieces of information truly bankable and financeable? And how do we think about that? How do we address it? How do we really collaborate together to answer that question? And to start answering that, I'd like to welcome, as I mentioned earlier, Sonali Mitra from CUR8, who will share how her team is building the financial pathways that make offtakes and financing more attractive, more understandable, and just better in general for investors and lenders. And off to you.
Thanks, Trenton. Hey, everyone. I am Sonali. I run carbon finance at CUR8. We are a Google Ventures-backed carbon removal platform that works with project developers such as yourself to connect you with buyers. And we work with yourselves and financiers to finance some of your projects through these offtakes that you may or may not have booked. We've been long partners with Puro, and I'm thrilled to be joining the webinar. Today, we'll be focusing on the financing side of CUR8's offerings, which was built for project developers. The idea was simply to make bank capital accessible to all of you and act as the bridge to bankability. As it relates to bankability, one of the core things that we talk about is always that it starts with the offtake. So knowing which offtake is out in the market, especially the product that we just saw, thanks Robin, helps us at CUR8 get our financing product out to you guys that need it. So I'll talk about the financing product in a little bit more detail, But first, taking a big step back, I wanted to talk about the types of projects we work with and what we find common amongst all of them. So I'm sure across the attendees, there's lots of different project developers working across enhanced rock weathering, bio-based materials, direct air capture, biochar, biomass, mineralization, and others. We think that all of these technologies are going to be needed all at the same time to get us to the gigaton scale that we need to. But across all of these different technologies, it's the same funding bottleneck that I've heard startups say pretty often when you're moving from lab to field and field to 10x. You are starting to build the tech that the world needs. If we go to the next slide, you're often in places that have never seen it before and in a market that is still forming. So you're constantly juggling science, hardware, and software under commercial and regulatory uncertainty. And that alone makes financing really, really hard and very slow. In a lot of ways, I think of it as 5D chess that you're playing. So then comes the problem statement, really. It's a chicken and egg problem, and you're trying to figure out what comes first, cash or delivery. You need the money to build your project, but you need the project to actually make the money. The timing mismatch is basically what stalls hiring, procurement, and scaling. So how does one work around this problem? I normally love to run a poll just to do a show of hands, and you're very welcome to type some stuff out in the Q&A, which we'll get back to later. But typically I see that, startups and project developers have a combination of grants and VC money and upfront buyer payments that they use to fill this financing gap. And what we see in the next slide is that typically grants are smaller and slower, which you'll be familiar with. VC is expensive and it dilutes you, and upfront buyer payments are increasingly starting to be rare. So they're helpful, but they're inconsistent and they don't reliably scale your growth. So how do we actually start to think about solving this chicken and egg problem? The answer that we got to at CUR8 was we wanted to use the demand that you've already earned to unlock the capital that you need now. So in plain English, it's basically taking your long-term offtakes and lending against them. So you pull forward the cash today. And as the next slide says, you deliver, as you deliver all of your carbon credits, the buyer pays, and those payments repay the loan. So think of it as bringing forward a portion of your future paycheck, and that being purpose-built for carbon removals. So there's no mystery here. You get the upfront cash. We take on the banking lift with our partners, our banking partners, and you build a track record with the banks. Therefore, building that pathway to bankability and access to cheaper capital over time. The primary reason that we did this was because we wanted to help you stay focused on moving the atoms. We were not doing it. We were good at moving the bits. And what we thought was, along with the bits, if we moved the money, we could help you stay focused on your job, which is to remove carbon. And our job would be to make the financing the easy part. So if we go into the details of how it actually works, it's a pretty simple 4-step process. So the first one is you need an offtake, as I alluded to earlier. So at the stage at which you're about to sign an offtake, and at the moment we've put a threshold of 5 million. But if you're about to sign an offtake or you already have signed an offtake that is worth more than or equal to $5 million with a creditworthy buyer, come find us. The next step is for us at CUR8 to run a quick assessment so that we can basically see whether your contract is bankable, we can look at your basic financials, and we can ascertain that your science and operational processes are up to the standards and marks. And we partner with lots of different providers to ascertain that you don't have to double work to give us all of the information that you may or may not have already provided to Puro, for example. So the step 3 then is that we work with our bank partners, which are global, to arrange the loan wherever there's the best fit so that you can get the cheapest loan possible and you receive the cash upfront. And then once the loan is done, step 4 is to basically link it with your deliveries. So as you deliver the carbon, the buyer payments start to repay the loan automatically. The thing that I would love to emphasize is that in structuring this product this way, we wanted to make sure that you had control over your project and that we took care of all of the complexity with the banks and insurers. The initial assessment that we do takes a couple of weeks. And at the point at which the data room or the project information in simple language is ready and is sufficient to be presented to the banks, we expect to take about 3 to 4 months working with the banks to get you a term sheet, to get you loan documents, especially for first-time borrowers, and then to cash in the bank between 3 to 4 months after that point. And repeat deals we expect would be much faster. So what do the terms look like? So at the minute, our loan sizes that we are looking to facilitate would be typically up to 3 years worth of deliveries. So if your offtake contract starts today, we would be looking to lend up to 3 years of your forward deliveries. And the sum that we would look to lend to would be typically 30 to 40% of the overall contract value. So that would mean that if it is a 5-year offtake or a 7-year offtake, we would look at either 30 to 40% of that entire offtake length or up to 3 years of deliveries, whichever is smaller. In terms of the rates, our promise to the market has been to do mid-teens, and we typically see that across the different types of projects and carbon removal pathways, mid-teens is where the average project lands. Now, this will obviously vary by pathway and the length of the contract and insurance, but this is what we find is not punitive to most carbon removal projects. The loan length, as I sort of alluded to earlier, which is in tandem with the loan size, is generally 2 to 5 years and is aligned to your offtake schedule. And the timing, as I've alluded to earlier as well, would be 3 to 4 months from when you have the data room ready to when you actually get the cash in hand. In a plain English way, I wanted to emphasize that it's usually cheaper to raise debt capital than selling more equity for people that are not very versed in financing. But if I start to compare all of these different things, you might be wondering on the other side, why would you be a likely fit for this particular offering? And you're likely a good fit if you've got the offtake or are just about to sign it. You have creditworthy or top-tier buyers. You've been issuing credits with registries such as Puro, and you have line of sight into when those corks will actually be issued. So at the time of the loan disbursement, you should have your corks ready to be issued. You have basic delivery risk remedies in place. So effectively saying, right, okay, what happens if your project is delayed? What happens if there's uncertainties? In those cases, how do you ensure that the buyer gets some sort of a remuneration in place? How do you ensure that there's cash in the bank to be able to pay your installment back? So having a fail-safe switch, basically. I missed a point there, but you can access, you can pass through all of our science, operational, financial diligence. If you're close to having all of these things in place, that's great. Come talk to us. We'll help redline all of the missing pieces so that you can start to think about bankability quickly. We've done this before. This is not our first rodeo, and the very public deal that we've disclosed in the past is our partnership with enhanced rock weathering provider Undo, where we worked with Undo's offtake with British Airways, which we structured and effectively loaned a part of the future payments out to British Airways upfront with the help of our banking partner, Standard Chartered. The offtake size was 4,000 tons over 5 years, and the cash that we pulled forward was about 40% of the offtake. The repayment for Undo's loans were tied to BA's payments. As under delivers, BA's payments are unlocked, and that repays the loan. Why this structure mattered was Undo was able to avoid dilution, move faster, access credit history, build credit history, and then access further non-dilutive capital from other banks. We then took away all of the learnings, and we ensured that the structure was repeatable across different pathways. So that said, we then sort of have made this product obviously available to everybody out in the market. And if you're sat on the other side of the screen right now, you might be wondering, okay, well, why offtake financing? Why the alternatives? Why not the alternatives? Why shouldn't I consider VC project finance? Why shouldn't I consider buyer payments? So if we move on to the next slide, there we go. We would basically see that if you stack up offtake financing across everything else that you've got in front of you, versus VC, it effectively provides cheaper capital. You keep the ownership. Versus project finance, it is faster, lighter on collateral. Typically, project finance requires you to line up lots of different ducks in a row. This is designed for earlier scaling, especially if you're in the early stages of trying to secure project finance. It is also designed to be a working capital product, which basically means that it can inject capital as you're scaling very fast and you're cranking through your deliveries. Versus upfront buyer payments, it's just easier to close because you're able to offer buyers more friendly terms and they can pay on delivery and therefore do not take on delivery risk. In the next sort of framing of it, the way we think about the outcomes that we want to be able to achieve for you with this product is that we want to be able to make sure that the upfront capital that you get also builds your bank track record. We want to make sure that we scan the market for the best available rates that you've got. And we work with our global partners to do that. Standard Chartered is obviously one of them. We've been working with lots of different banks in the background that we haven't quite publicly disclosed yet, but that enables us to access the best rates. And then finally, simplicity. So we handle the diligence and negotiations so you can start to focus on delivery. With that, I just wanted to say that if you've got an offtake or are close to banking one, then definitely report it to the Offtake Issuance calendar and reach out as well to us via CUR8.earth or on our website. There's a neat little QR code in there as well if you wanted to scan it. But back to you, Trenton, with all of the next couple of exciting announcements.
Thank you so much. That was awesome. It's hard to compete with you guys. Those are two really, really cool, both context products, I would say. One that's existing, one that's coming. I know there's a lot of questions there. One was around the contact email. So just for those that had that question, I noted we answered it live. Again, materials and information will be shared after this event, but for those that would like to write it down, you can do so right now. Be very quick. All right. Now, thank you again. That was a very clear perspective, I would say, on bankability, investability, and how you are trying to close this gap and get better capital or quote unquote, maybe easier capital into the process sooner, faster, and stronger. But now let's bring it back to the market itself, what it means for suppliers, buyers, and how offtakes are actually moving from agreements to scale. There's a lot we could talk about here, but for that, I'm going to turn it over to my colleague, Julian Jacob, who's our head of Offtake Investor Solutions at Puro.earth. Julian, off to you.
Thank you. And hi, everyone. So Julian calling from Paris in France. So what we've heard from our great partners here is that new products are laying foundation for a CDR market that is more transparent, scalable, and built to last. It's now a market that can expand into new spheres. It can welcome new entrants, such as financial institutions, and it can empower the existing ones. It can unlock the capital that this ecosystem needs to fulfill its mission, which is to mitigate the worst effects of climate change. If I try to recap key takeaways from our two previous speakers, maybe putting myself in the shoes of an investor or an off-taker, here is what I understand I can now do more effectively than before. One is getting smarter market intelligence. I can now access transparent pricing data for forward credits at different maturities and with a shared transparent reference point, just like in other institutional markets, such as commodities. Because this data is aggregated from the market by a trusted third party, that is Nasdaq, buyer gets a clearer sense of the value of the credit it's looking at, and then investors can better evaluate the uncontracted cash flows from a project it's looking to invest in. Second, forward-looking supply signals. I can now better evaluate the future supply dynamics by looking at availability data from leading CDR providers across different pathways. That allows me to size the supply market and understand the dynamics with more precision. And if I combine this with other tools in the market, like CDR FYI, which has already reported over $6 billion or euros worth of sale in the offtake market, I then get a far richer picture of what supply and demand look like. Three, standardized contracts and financing. I can now leverage plug-and-play offtake contracts and funding structures that reflect both market learnings and offer fit-for-purpose solutions, which lower the barrier for buyers and investors, while also de-risking procurement and capital deployment. And alongside these tools, insurers, as Fornelli mentioned, are creating risk mitigation products and developing them more and more that can make the market accessible to a broader range of players, including mainstream financial institutions. All of this is underpinned by a robust certification infrastructure, and this is where Puro.earth plays the critical role. Certification matters at various points or various moments in a project's journey. Before a decision is made by an investor or an offtaker, they need confidence that a project will be able to monetize its CDR activities and generate reliable revenues once it's become operational. And after commissioning of the project, projects need exposed verified credits that can be issued and delivered under sales contracts, turning CDR into real cash flows. Puro certification is built to meet these crucial needs. At its core are science-based methodologies developed transparently and released in the public domain, which all of you can access. These set the rules that projects must follow to issue carbon credits, which are called with Puro CUR8s. They cover mainly things like monitoring, reporting, verification, environmental and social safeguards, additionality, and so on and so forth. And the goal of those methodologies is simple. It's making sure that every quart represents 1 ton of CO2 durably removed from the atmosphere. Compliance with the rules of those methodologies are verified by an independent third party appointed by Puro, and this verification happens once the project is built. And then again, throughout its life cycle, basically every time there needs to be a credit issuance, which with Puro can happen up to once every month. But there's a practical challenge there. There is always a time gap between when an investment or an offtake decision is made and when a project starts issuing exposed verified credits. That's exactly why Puro.earth introduced a preliminary assessment last year. And it has become quite a popular and a very helpful tool in the market since. The preliminary assessment by Puro plays 2 critical roles. One, it's de-risking during design phase of a project. So in the early stage of a project, the team can benchmark themselves against the Puro methodology. And if gaps are found, they can act on or take corrective measures before it's too late. The outcome of the preliminary assessment is a stamped report that gives confidence to both internally your boards or externally your investors and off-takers that the project is on track to qualify and issue credits under a Puro methodology. And then the second thing it achieves is a rehearsal for the future audit. Projects through the preliminary assessment get a practice run of the audit process whereby they're introduced to Puro's digital tools and standardized templates, which help them understand requirements for audit early and organize their data flows for future audits. This makes the future audits both faster and smoother. And one of many examples of our tailor-made templates, for example, is our LCA, which result from years of learning to speed up that future process. So a few words on what the preliminary assessment encompasses. One, it's conducted at the facility level, which in Puro's jargon means for a given project. It is document-based, so you need to be able to provide a series of documents to pass this assessment. and they are evaluated under a large number of criteria that are deemed critical for the specific pathway or methodologies that you choose. Because projects are often still in design phase at this stage, the assessment allows for flexibility. So some elements may already be in their final form, while others may still be in development. And this is why the preliminary assessment can conclude that multiple options are viable and workable in the context of the methodology. While not all documents may be in their final form, reporting formats are as close as possible to what's needed for a future audit. Once a preliminary assessment is passed, because it can be also failed, projects that clear this qualifying step, Puro.earth can then amplify their visibility across our ecosystem of sales partners, of investors, and partners just like of CUR8, for example. Projects that can then share their data in a standardized, digestible format that the market recognizes. And this makes it easier to secure financing, attract partners, and ultimately move from design to execution more efficiently. Several of these successful assessments have already been published on our website, which I invite you all to go and check. Note that not every supplier working with Puro appears there because this assessment is optional, but mainly find it a valuable way to prepare for audits and to engage with third parties. And of course, if you want to dig deeper into this report, you can always reach out to us, and we'll be happy to have an ad hoc conversation as well. So to summarize, the market is adding essential building blocks here: transparency of data, forward-looking supply insights, standardized funding structures and offtakes, on top of a certification infrastructure that de-risks both investment and procurement. Together, those elements will create not just a functional market, but a scalable and investable market that is resilient in the future. And if you'd like to learn more or explore specific project examples, please don't hesitate to reach out. We'd be glad to continue this discussion. And I think also a big team from Puro will be at Climate Week. So if you're there also, don't hesitate to reach out.
Awesome. Well, Julian, thank you very, very much for pulling us all together and bringing it home, as I would say. But we've now heard from Nasdaq, CUR8, and Puro, and I think everyone on the call would agree it's an extremely powerful combination of perspectives that candidly has driven growth in this market year over year over year and beyond, with offtake agreements increasing and their volumes growing now that we've seen 2025 progressing. It's corporate stewards such as those on this call, and many of you listening, that will keep the market's momentum growing. But with that said, let's open it up to Q&A. I think we've answered a handful of your questions thus far in chat, but many more are coming. You can drop more questions in the chat box and we'll take them live to the best of our ability. With that all said, I will quickly just make sure those that had questions answered are denoted here. So I'll read through them real quick and then we'll open it up for the rest of the group. Without being too redundant, again, is the webinar recorded? Will there be materials? Yes and yes, that will be set after so everyone will see that. Excuse me. There was a question aimed at NASDAQ. Are you looking at pre-purchase agreements for projects still in development, or is this only for issued corks? Per Tomas, the issuance calendar is for future credit issuance, not already issued credits. Going down the list, another question on carbon.nasdaq.com is not active yet. When will it be online? Tomas responded, the website will be live later on launch. We will first run a pilot, and thereafter it will be open for the public. Other questions, again, around the website being live and when. There were a couple questions around email addresses and a reminder that we'll share that backwards to you all. There were some nuanced questions answered around specific projects. Again, another question on will the NASDAQ product be only for Puro? As Tomas mentioned, no, it'll be a platform for the full market for projects which have not yet decided on a registry or projects which have decided any registry, not only for Puro. So it's a wider market activity. And then a handful of other questions, although one I'll flag for CUR8, which is 5 million is total project revenues or 5 million worth of, they say corks, but credits. Swinarla, you mentioned 5 million worth of corks or credits, i.e. your offtake value equals 5 million. And then I think we have now gotten to the point where we have answered those questions. And now we have a handful of others that I can happily walk us through and see who can tackle these. This one, Robin, I think was the first one that came in right away, and it may not be as pertinent, but they asked, is it possible to sell 1 to 10 gigatons of removed CO2 on the market? I could have an answer for that, but Robin, what's your initial take on that? That'll be
This
a
is
good, easy one.
so this is a data product. It's not a sales channel.
There you go.
We would link you if you found someone who could sell that to that site, and then they would take it from there.
Awesome. Thank you. Going down the list, pardon me for reading, everyone. Let's keep going. It says, how will Nasdaq platform access the quality and accuracy of the information provided by project developers? It's a good one, I think, for you, Robin.
Yeah, no, I think that's one of the key pieces. The data needs to be trustworthy. So there's a few things we're doing. As a supplier, you may choose to ask one of the intermediaries that are known in the market to send the data on your behalf. That gives a little bit of extra basis for those numbers. There are firms out there, as we all know, and I won't name names, who either run DMRV services or sales channels where they do a little bit of additional diligence as well. So the implication being that if it comes through those channels, then maybe a viewer has more confidence in those numbers. But as I said, we're also taking down information around project maturity. Do you have financing? Has the plant been built? Do you have a registry? Is the machinery you're using to remove the carbon tried and tested? Those are all factors that give confidence around the ability for that project to deliver according to the time and scale that it's claiming. And we're looking to put a very transparent sort of scoring off that to give a buyer the ability to potentially filter out some of those as a more risky, or maybe they're looking for risky and they can filter those in. That's the dynamic we're trying to get here. We're trying to be a transparent provider of data and allow as much as possible the consumer to make a view as to the types of credits that they are looking to assess, and maybe through one of the industry partners do further diligence or sales inquiries.
Thank you. I think this will be maybe not the last for you, because I think that's prompted a few further questions. But one was, are there upfront fees, if any? And this was at 10:30, so I think this might be applicable to you also, Swarnali, but I'll just open it to both groups. Upfront fees for anyone?
Not for us.
Same, not for us either. The fee that we charge is effectively just an interest rate, which is to be expected for any loan, and you just get one pricing that includes everything from our bank interest rate, our margin, as well as insurance that comes embedded within the loan.
Thank you. Going backwards to Nasdaq, I feel like I'm on Jeopardy. This is great. How does Nasdaq regulate their prices if all registries / no registries are allowed on? Anonymous attendee.
I'm not sure whether that isn't sort of tangentially aligned with my previous answer.
Yep.
The pricing will come through from the supplier, and those filters, I suggested, the transport through which it comes can add an additional layer of comfort, and then the buyer can assess as well. But it is really key for us to make sure that this data is trustworthy. So we will be continuing to review that and put in potentially additional checks if we start to suspect that there's some sort of inflation going on, potentially around the volumes being delivered. But it's a balance that we are very, very keen to maintain on that quality.
Thank you. This one, I think, is aimed at you. Yes, Swarnali, do you have any specific region restrictions?
No, we are specifically region agnostic as long as it's a carbon removal technology, and a registry such as Puro is endorsing it / is able to issue a protocol for. We have banking partnerships everywhere that is able to afford us global coverage.
Thank you. Here's one for anyone here. What are the most difficult negotiation issues for the offtake-based loan, e.g., covenants, warranties, representations, so on?
I'll have a crack at that one. It seems very up my wheelhouse, and then welcome others to join in as well. I think for me it is very bespoke, depending on the project, depending on the offtake. I think most offtakes that come in have reasonable price and volume thresholds at the moment, and depending on how mature your technology is, insurance is able to give you a reasonable coverage. I think where reps, warranties, and covenants come into play is when you're looking at the fallback options of what happens to the remainder of the coverage that insurance wasn't able to provide for. And that's very typical for any mature market. So that's to be expected. Second is what happens in case of under delivery or no delivery. So banks always want to make sure that they have contingency plans to recoup their money. And as long as the offtake contract as well as the loan agreements talk about each of those waterfalls, and in case of delays in operations, what happens, and there is a complete loan loop in that sort of waterfall, the loan documents start to become easier and simpler. And what I will say is that at the moment, each of these loan documents with the different parameters are more bespoke, but as we do more deals, my ambition is to see more standardization across the products.
That was a good answer. I don't have something to add, but does anyone else on the panel want to add anything to that? I'll move on because we have similar questions. That was very thorough. So you stole everyone's answer. This is an all panelist question. Thank you, by the way, for that question from the group here that specified who. Could the panelists comment on how they see the role for governments in ensuring financeability of CDR projects? It's a big question, little out of topic here. But the positive comment here is it looks like the market's taking off. So do we need governments in the space? Anyone have a bullet to place on this? I'll time box you on this answer because that's a fun one. Anyone want to tackle this one?
Trenton, you might have to time box me. I think we always need governments to come in, and at the moment, let's just say we're not going to get to gigaton with the amount of capital available. And if we want more private capital in, we have to get governments in to start to de-risk it.
I could add.
Please, go ahead.
I could add to that. That's actually we have a very live case of this discussion happening in the EU. A few weeks ago, a draft was released with a few proposed intervention mechanism for the EU throughout potentially a carbon removal fund, through potentially a buyers group led by the EU, a bit like I think was done by the DOE in the US at some point. Other things are being tested. So it's out there, it's public documentation that you can read that will go into a lot of detail on that.
Thank you, Julian. A lot of good questions. I like this. We still have a little bit of time. Question to CUR8. What will be the rate of interest?
And this was in the materials. Our promise to the market is mid-teens, and that is an average across all different project types. We obviously have to look at your project to give you more specific quotes, but that is the ceiling that you might expect.
Thank you. There's a general comment on this that I thought we could answer maybe with a bullet or two from Robin and Julian, but someone asks, what's the objective of this? And I'm still confused at Nasdaq and Puro's roles in the marketplace. I might say, Julian, maybe just because you're over here, maybe give Puro's point of view, and Robin, I saw you in mute, but hand it right back to you. So.
Yes, sure. So, I mean, well, Puro is a standard and registry. So we issue methodology, we arrange a certification journey around this methodology, meaning we appoint the VVBs or the auditors, we issue the credits onto our registry, and then they're traded in between people. So Puro doesn't act as a marketplace at all. We don't sell credits or anything like that. We're really a standard and registry. If I could recap, maybe I think roughly what I mentioned is that so today we heard from Robin, who is launching with Nasdaq, who is launching an issuance calendar where people will be able to share their future availabilities of credits to sell with price points across methodologies, across maturities in the future. Swernali then is able to find buyers through CUR8 and also finance offtakes by linking you as a project with an offtake with banks and insurers. And then Puro, what I described was that we had the certification journey that is very well known for when a project is live and issues credits. This is a very well-tested process now. And then Puro also is involved in design phase of a project and can basically preliminary assess the compliance of a project to a methodology. So I tried to recap in under 30 seconds the whole thing. Please, if anyone has further questions on that or wants to add, please feel free.
Cool. I
I'll
guess
get Robin.
what's
Yes,
Nasdaq
please.
doing? Nasdaq's an infrastructure company primarily, a market infrastructure company. We look to add value in that area, and we see a real value that we could add into this offtake availability data, and that's what we're building. We think that's useful and helpful for the market. As I say, it's not a marketplace, but we will provide links to marketplaces should a supplier wish to send us one.
Thank you, Robin. Thank you, Julian. I hope that helps answer this question. I thought that was a nice general question, so thank you. I think this is going back to Robin, and I would answer it for you because I think we've answered it already, but is the platform available for projects still in the design phase?
No, it's very much in the pre-production phase. As I said, the reason for me being here is to encourage as many suppliers to send data. The more data we have, the more comprehensive this platform will be, and more valuable it will be for the market.
Thank you. Going to CUR8, keeping going. We have a lot of questions. For those curious, we've had 57 questions asked. Very, very good session. So to CUR8, is the loan extended solely on the existence of offtake agreements, or does it rely on the company size as well, or the company's equity, it meant to say, I think, if I'm interpreting it correctly?
Yeah. So at the moment, the product is designed only to take offtake agreements and lend against that. For equity type loans, you would typically look to go to banks that do venture debt. We saw our role as introducing a new product that didn't exist in the market that could bridge that gap.
Thank you. Right on that, what's the monetary range that banks would be willing to lend?
It's a great question. So I think it depends from bank to bank and it depends from offtake to offtake, but I like to think about it in 3 different triangulation metrics. So one is typically the loans that we would like to do, because it's a working capital product and given the risk appetite, we like to see 2 to 3 year loans, which then brings me back to the point of what is the loan ratio to the entire contracts ratio. And typically we see that banks are comfortable to lend up to 30 to 40% of an entire contract's value. So those 2 are triage points. And then the third one is typically insurance wrappers are available up to $25 million. And that basically means that your loan could go up to all of that amount. Now, there are very few players in this market that can actually access that kind of loan because offtake agreements are far and few still. They are growing, but they're not up to that level yet. So what I'm seeing more in the market is an average of 5 to 10 million of loans, if that's helpful.
I think that was helpful for me. I hope it was to the person asking the question, but it answered it for me. There's a handful of CUR8 questions that I'll bundle together in just a moment, but going through the list, another question here is, could you confirm if American companies are presently not entertaining project pitches for offtakes, awaiting clarity on use as synergy with the Paris Climate Agreement? Sitting here in Atlanta, Georgia, in the United States, I can say that corporates in the United States are still entertaining project pitches for offtakes. They have a keen interest for it, but do be aware it's time-based. There's lots of temporal questions on when, why, and where it'll occur. But yes, absolutely, the market is still very valid around the world. No matter what we see in the news, corporates know they need to reduce their emissions and know that they need to pay for removals and other credit types over the duration of their corporate life cycle to be able to reduce what they do and offset what they can. But moving on from that, I know we wanted to bundle some questions, like I said, so I'm going to give you a couple in a row, Spindler, so we can help you out. But what would be the cost in a percentage of borrowed capital to the supplier to have CUR8 on board is one. And then, well, I'll go there and I'll give you one right away after, because that might be an easy one for you.
Yeah, there's a couple of Trenton, I'll help you out as well on just CUR8's commission and rate. So I would say that the CUR8 mid-teens rate includes the entire stack. So it includes the bank's stack, as mentioned before, insurance, as well as our margin. At the minute, we charge a couple of basis points, which is again only really charged along with the loan. So if the loan doesn't go through, then there's no fee that we would get. There is no upfront payment to it. But if we've put in a lot of work and taking on the risk to actually hold the loan and then forward it on to you guys, then that's how we make up for that risk. And then there was another question around whether CUR8 is a loan broker. That is one of the good ways to think about it.
Awesome. Look at that. Thank you. I'm going to say we answered a handful of these lives. The question that was right after, is there any options for offtake agreements below the CUR8 5 threshold? And are there steps for getting an agreement?
At the moment, I mean, we're doing lots and lots of live deals, which basically means that we're prioritizing the bigger ones first, just because we're a tiny team, but we will do our best to accommodate very innovative projects. So just reach out and then we'll have a chat. Typically, the steps that we take to assess an offtake contract for bankability is a very manual, boring read through of parameters and making sure that the price and the volume thresholds are to the degree that a bank would find robust.
Awesome. Thank you. I think there's a couple questions. I know we've had to dismiss a few. I apologize if your question was dismissed. We'll do our best to follow up after. But the final item I see here is, would marketing-based offtake agreements also be entertained by CUR8? And then what sort of project-based and market data is Nasdaq looking for from suppliers at the moment? I know we've covered both those questions a bit earlier, but as a final question, I thought we will end on that. So Sonali, Robin, any final comments on those two questions in the Q&A?
So I'm afraid I don't actually understand what marketing-based offtake agreements look like. So what I will say is that if there is a sum of money that a buyer has said they will pay in exchange for your carbon credits or corks, then that to me signifies an offtake agreement that we can look at.
And my answer, well, get in touch. We can give you the full list. But in summary, we're looking for, unsurprisingly, if we're building a calendar showing availability of forward offtake agreements, is size, price, dates, facility, registry, and methodology, those kinds of things. But please reach out. I think our email addresses, myself and Thomas, are being sent out to all suppliers. Give us a call. Reach out to us, and we'd love to jump on a call following this and talk you through what we're trying to achieve. Look forward to that.
Awesome. Well, hey, thank you every single person that asked questions. There was over 50, and I can't thank the audience enough for the engagement and just being very curious about where we're going, what we're doing, and what this webinar is about. But as a reminder for everyone on this call, today we looked at Nasdaq's issuance calendar, Puro's market perspective, and CUR8's work on bankability, financing, and everything in between. And we had quite a bit of other coverage from our fantastic speakers about the market's health, where things are going, and what might be happening in policy. I'd say together with these insights, I think we've shown that offtakes aren't becoming just contracts, but they're real catalysts for investment in carbon removal scale. And as we mentioned, we'll share this recording, including the Q&A and follow-up materials shortly. So if you'd like to continue the conversation, please reach out to us at Puro.earth or directly to today's speakers when we share the materials and their contact information. On behalf